Gold $5,000 per oz. January 2026. Gold isn't just breaking records, it's shattering them. $5,000 an ounce. That's not a spike. It's a seismic shift. You've seen gold rise before. But this is different. Inflation isn't just high, it's persistent. Geopolitical tensions aren't just noise, they're reshaping trade. And central banks? They're not just buying gold, they're hoarding it. 68% of global central banks increased gold reserves in 2025. That's the highest rate in 50 years. Here's what no one's telling you, this surge isn't just about fear. It's about survival. The average investor is still treating gold like a relic. But the ultra-wealthy? They're treating it like a lifeline. In 2025, family offices allocated 12% of portfolios to gold, double the rate from 2020. This is not merely a number. It is a signal. And if you ignore it, you're not just missing an opportunity. You're risking your financial future. But here's the question no one's asking: what specific forces defy historical precedent to drive this surge? The answer isn't just in the data, it's in the details. And those details? They're what separate the wealthy from the rest. Okay, so you've seen the $5,000 an ounce reality. But what specific forces defy historical precedent to drive this surge? Open loop 1, it's not just one factor. It's a perfect storm, brewing for decades. And it's still building. Look back to 2000. Gold was an afterthought. But then came the dot-com bust. Followed by September 11th. Then, the 2008 financial crisis. The pattern is undeniable. Every time global stability wavered, every time central banks printed trillions to stimulate economies, gold reacted. We saw inflation fears skyrocket in 2021 and 2022. Then, geopolitical tensions flared, from Eastern Europe to the Middle East. Gold wasn't just a safe haven, it became the only safe haven for many. This wasn't a trend, it was a fundamental re-evaluation of value. But here's where things get truly fascinating. Microhook: while Western headlines focus on financial markets, a silent giant has been driving demand for years: jewelry. In 2025 alone, demand from India and China didn't just hold steady, it surged. For billions, gold isn't just an investment, it's cultural bedrock. It's wealth stored, passed down, celebrated. Think about it: weddings in India. New Year gifts in China. These aren't discretionary purchases, they're ingrained traditions. The sheer volume of physical gold absorbed by these markets is staggering. It creates a robust, constant floor under the price that Western speculation alone could never achieve. This isn't just about sentiment, it's about deep-rooted societal value. Now pay attention to this part, because this is what nobody talks about. Microhook: for decades, Western investors largely abandoned gold for tech stocks, real estate, or crypto. But that's changing. Dramatically. Goldman Sachs Research, in their groundbreaking 2024 report, confirmed a seismic shift. Western institutional and retail money is flooding back into gold. Why? Because they're seeing the same instability. They're realizing that traditional hedges are failing. They're seeking real, tangible assets. They've watched the buying power of the dollar erode. They've seen the volatility of equity markets. Therefore, they're reallocating significant capital, creating a demand surge from both sides of the globe simultaneously. This is not a drill, it's a strategic pivot by the world's most sophisticated money managers. This is the confluence. This unique market environment, persistent global instability, unwavering Eastern demand, and the unexpected return of Western smart money, creates an entirely new paradigm for gold. It's a triple threat scenario no one fully anticipated. But here's the critical question you need to ask yourself. New open loop: why is this current gold rush so different from prior all-time highs? What makes this surge fundamentally unique, and potentially, far more enduring? You've seen the charts. Gold at $5,000 an ounce. A price that defies every model, every prediction. But here's the truth the market analysts miss. This surge isn't following the old rules. No war. No hyperinflation. No dollar collapse, yet. The triggers that launched gold to all-time highs in the past. They're not here. So why is gold rising? Because the game has changed. The mechanisms. Hidden. The catalysts. Unseen. And if the old playbook is obsolete, then what replaces it? You thought gold's rise was just another bubble. But the numbers tell a different story. Since 2000, gold has outperformed the S&P 500 in every major crisis, 2008, 2011, 2020, and now 2024. Why? Because the old rules don't apply anymore. And the new ones? They're written in data. Let's start with the first driver, economic instability. Not a blip. A trend. Since 2000, global debt has tripled, from $87 trillion to $307 trillion in 2023. That's not just a number. That's a ticking clock. And gold? It's the only asset that doesn't rely on someone else's promise to pay. But here's where it gets worse. Inflation. Not the 2% target, real, persistent inflation. In 2022, US inflation hit 9.1%, the highest in 40 years. And in 2024, it's still above 3.5%. What does that mean for you? Cash loses value. Bonds lose value. But gold? It holds. Now, the second driver, geopolitical shocks. You've seen the headlines, wars, sanctions, supply chain collapses. But here's the data. In 2023 alone, there were 183 geopolitical conflicts worldwide. That's up 40% from 2010. And every time a new conflict erupts, gold spikes. Why? Because when the world feels unstable, investors don't trust paper. They trust metal. Veronica Brown from Reuters Global put it best, gold is considered a safe haven, which investors seek out at times of increasing global uncertainty. But here's what nobody tells you, gold isn't just a reaction to crises. It's a hedge against systemic risk. The kind of risk that doesn't make headlines until it's too late. So, what's the takeaway? Gold isn't rising because of luck. It's rising because the world is changing. Debt is climbing. Inflation is sticky. Geopolitics are volatile. And gold? It's the one asset that doesn't flinch. But here's the question you need to ask, if gold is the safe haven, what does that really mean for your portfolio in 2026? Because the answer isn't just about buying gold. It's about understanding the new rules of the game. And the game? It's already started. What does safe haven really mean in this new era of unpredictability? How does it translate to your portfolio when the world feels like it's falling apart? Let me tell you a story. Imagine 2008. The financial world was in a freefall. Banks collapsing. Futures uncertain. Sarah, a mother of two, watched her retirement savings, built over 20 years, evaporate day by day. Every news report was a fresh blow. Her stomach churned with dread. But Sarah had made one unconventional decision years earlier. Against the advice of some traditional advisors, she'd allocated a portion of her savings to physical gold. Not a massive amount. Just enough to feel anchored. As the stock market plunged, 40%. 50%, even more for some sectors, her gold holdings, instead of plummeting, held their ground. They didn't make her rich overnight. Gold rarely does that. Therefore, she didn't just watch her entire future disappear. This wasn't about astronomical gains. This was about not getting poor. It was about the psychological comfort of knowing, even as the storm raged, a part of her wealth was shielded. It was a shield of ages, guarding against the unpredictable. That feeling of security, that's what a true safe haven offers. It's the quiet confidence that allows you to sleep at night, even when the headlines scream panic. Gold didn't just preserve Sarah's capital, it preserved her peace of mind. Therefore, when the dust settled, and markets slowly began to recover, Sarah wasn't starting from absolute zero. Her gold had provided a stable base. It allowed her to rebuild, not from ruin, but from a position of strength. Gold isn't about chasing the next lottery ticket. It's about building a fortress around what you've already earned. But here's the critical question, yet, how does this global demand manifest in specific markets, challenging our very understanding of gold's intrinsic value? You thought gold was just a metal, a hedge, a line on a chart. But here's the truth, gold is the only asset in the world that is both a cultural cornerstone and a financial fortress. And that duality is rewriting the rules of demand right before our eyes. Open loop from previous segment, yet, how does this global demand manifest in specific markets, challenging our very understanding of gold's intrinsic value? Let's start with the numbers. In 2025, India and China alone accounted for 60% of global gold jewelry demand. 60%. That's not a market, that's a movement. And here's the kicker, this demand isn't slowing down, even as prices climb. In fact, in 2024, gold prices hit an all-time high of $2,450 per ounce. But in India, demand for gold jewelry increased by 12%. In China, a staggering 18%. Wait, what? How is that possible? Shouldn't higher prices mean less demand? That's what Western economists have been telling us for decades. But here's the thing, in the East, gold isn't just a commodity. It's a language. A language of wealth, of status, of tradition. In India, gold is woven into the fabric of society. It's given as dowry in weddings, asterisk not asterisk as a financial transaction, but as a symbol of security and prosperity for the next generation. Did you know that the average Indian wedding involves 300 grams of gold? That's nearly $20,000 at today's prices. And in China, gold is a status symbol. A gift for the Lunar New Year. A way to show respect and honor to your family. This isn't about price sensitivity. This is about cultural identity. But here's where it gets even more fascinating. While the East is buying gold for tradition, the West is returning to gold for a very different reason, fear. In 2024, Goldman Sachs released a report that sent shockwaves through the investment world. They found that Western investors were pouring money into gold at the fastest rate since 2011. Not for jewelry. Not for tradition. But as a hedge. A hedge against inflation, against geopolitical risk, against the very uncertainty that defines our era. In 2023 alone, Western ETFs saw inflows of $23 billion into gold. That's not a trickle, that's a tsunami. So let's recap. The East is buying gold because it's who they are. The West is buying gold because it's what they need. And this dual demand, it creates something unprecedented, a floor for gold prices. A floor that doesn't depend on economic cycles, on interest rates, or on the whims of central banks. In 2020, when the world shut down, gold prices didn't just hold steady, they soared. Why? Because the East kept buying for tradition, and the West kept buying for safety. In 2024, when inflation spiked and markets tumbled, gold prices climbed. Again. Why? Because the same dual demand was at play. Now, let's talk about the numbers that really matter. In 2025, India imported 842 tons of gold. That's more than the entire gold reserves of most countries. China, 134 tons. Combined, that's nearly 2,000 tons of gold. For context, the entire world produces about 3,000 tons of gold annually. So when you hear that gold is in demand, understand this: it's not just a market. It's a global phenomenon. A phenomenon that's reshaping how we think about wealth, about security, and about the very nature of money. But here's the question that keeps me up at night. If gold is such an impenetrable hedge, why are some of the smartest investors in the world still warning about its vulnerabilities? New open loop: despite this demand, is gold truly an impenetrable hedge, or are we overlooking critical vulnerabilities? You've heard the whispers. Gold, ancient, shiny, allegedly safe. But is it really the impenetrable hedge you've been told it is? Or is this just another fairy tale peddled by those who profit from your fear? That's right. One of history's most influential economists called gold a relic. And today, the debate rages on. Let's start with the critics. They'll tell you gold has no intrinsic yield, no dividends, no cash flow. Just sitting there. Shiny. Useless. And they're not wrong. Over the last decade, gold has underperformed the S&P 500 by 47%. So why on earth would you tie up your wealth in something that just stagnates? But here's where the critics get it dead wrong. They're measuring gold by the wrong ruler. You don't buy gold for growth. You buy it for survival. Take 2008. The financial system was on life support. The S&P 500 crashed 37%. But gold? It soared 25%. Or how about 2020? Pandemic panic. Markets in freefall. Gold? Up 24%. So what's the real story? Gold doesn't care about your quarterly earnings reports. It doesn't care about Fed meetings or corporate buybacks. It cares about one thing: chaos. And chaos? That's the one thing the modern world guarantees you'll get. But, here's the kicker. The critics will say, Lydon, gold is just a speculative bubble. It's all hype. And to that, I say, show me the bubble that's lasted 5,000 years. Gold isn't a relic. It's a time machine. A bridge to every empire, every crisis, every collapse, and every recovery. And if you think it's going to stop working now, you're betting against history itself. But here's where things get really interesting. If gold's role is so debated, how do you strategically allocate this asset into a robust, future-proof portfolio? Because the truth? It's not about if you should own gold. It's about how much. And that's a question most investors get horribly wrong. But we'll get to that. You've heard the whispers. Gold, ancient, shiny, allegedly safe. But is it really the impenetrable hedge you've been told? Or is this just another myth, whispered across centuries, now echoing in the digital age? But here's the truth no one tells you: gold isn't about getting rich. It's about staying rich. Let me tell you a story. In 2008, the world burned. Markets collapsed. Lehman Brothers fell. The S&P 500 lost 37% in a single year. But gold? Gold rose. 5.8%. Not a fortune. But not a loss. A shield. Now, imagine you're Sarah, a schoolteacher in Ohio. She had 10% of her portfolio in gold back then. Not because she was a gold bug. Not because she was greedy. But because she was wise. When her 401k bled red, that 10% didn't just hold its value, it balanced her losses. Therefore, the first rule of gold allocation: it's insurance, not income. But here's where most people go wrong. They either ignore gold entirely, or they go all in. The data is clear. Over the past 20 years, a portfolio with 5 to 10% gold has consistently outperformed a 100% stock portfolio during crises, with less volatility. Therefore, the second rule: diversify, but don't overdo it. Now, how do you hold this golden shield? Physical gold. It's tangible. It's yours. But storage, security, insurance, that's on you. Gold ETFs. They're liquid. They're easy. But you don't own the gold, you own a promise. Mining stocks. They're leveraged. They're volatile. They're not gold, they're bets on gold. Therefore, the third rule, match the method to your mission. But here's the part no one talks about. Gold isn't just a number on a balance sheet. It's a psychological anchor. When markets panic, when currencies tremble, when governments falter, gold doesn't. It can't. It's been the bedrock of value for 5,000 years. Therefore, the fourth rule, align your allocation with your risk tolerance. If you can't stomach a 20% drop in stocks, gold isn't just an option, it's a necessity. Now, let's build your fortress. But here's the dark truth. Most people won't do this. They'll chase the latest meme stock. They'll panic sell at the bottom. They'll ignore the one asset that stood the test of time. Don't be them. Tone shift, commanding, sage, do not chase the headlines. Do not fear the noise. Build your fortress. One golden brick at a time. This video is for educational purposes only and does not constitute financial advice. Always consult a qualified financial advisor before making investment decisions. Now, you know the how. But what is the true underlying force that validates gold's ancient power in today's unpredictable world? The answer isn't in charts. It's in history. And it's coming next. You've been asking the wrong question. It's not if gold is safe. It's why it's still here after 5,000 years. And why, in 2026, it's not just surviving, it's thriving in ways we've never seen before. This surge isn't just about inflation. It's not just about war. It's not just about central bank stockpiling. It's about all three, a perfect storm of forces, converging for the first time in history. But here's what no one's telling you. The real power of gold isn't in the metal itself. It's in what it represents. It's the only asset that doesn't ask for permission. It doesn't rely on governments. It doesn't need algorithms. It doesn't care about quarterly earnings. It just is. And in a world where everything else is being rewritten, currencies, borders, even trust, that stability isn't just valuable. It's priceless. And here's the kicker. The demand isn't coming from one place. It's coming from everywhere. The East, cultural, generational, woven into weddings and traditions. The West, strategic, defensive, a hedge against chaos. Two worlds. One metal. And that dual demand. That's what makes gold unbreakable. You're not buying gold to get rich. You're buying it to stay rich. To preserve what you've built. To ensure that when the next crisis hits, and it will, your purchasing power doesn't vanish overnight. This isn't speculation. It's sovereignty. But here's the truth no one wants to admit. Gold's power isn't in the past. It's in the future. The future of a world where trust is fragile. Where currencies are experiments. Where control is slipping from institutions into the hands of individuals. And in that world, gold isn't just an asset. It's freedom. Now, I need to be clear. This video is for educational purposes only and does not constitute financial advice. Always consult a qualified financial advisor before making investment decisions. But if you take one thing from this, let it be this. Gold isn't just part of your portfolio. It's the foundation of your financial empire. The quiet, unshakable base beneath everything else. And in 2026, that foundation isn't just smart. It's essential. So ask yourself, not whether you can afford to own gold, but whether you can afford not to. And that underlying force? The one that validates gold's ancient power in today's world. It's not gold itself. It's you. You've been asking the wrong question. It's not if gold is safe. It's why gold has been the unshaken foundation of wealth for 5,000 years. Here's the truth no one tells you. Gold isn't just metal. It's the ancient guardian of your purchasing power. Since 1913, the US dollar has lost 96% of its value. The British pound? 99.5% since 1900. But gold? It doesn't decay. It doesn't default. It doesn't ask for permission. This is the force that validates gold's power. Not hype. Not speculation. Mathematics. Every fiat currency in history has failed. Every single one. But gold? It's the exception. The rule. The unbreakable constant in a world of financial chaos. Holding gold isn't just an investment. It's a declaration. A shield against the inevitable erosion of your wealth. A bulwark against the fragility of the system. Smart investors aren't buying gold because they're afraid. They're buying because they understand, they see the storm coming. And they're securing their future. This video is for educational purposes only and does not constitute financial advice. Always consult a qualified financial advisor before making investment decisions. Here's the final truth. Gold doesn't need faith. It doesn't need trust. It doesn't need governments or banks or algorithms. It just is, and that's why it will always be sovereign. You've stood on the mountain. You've seen the gold. But the journey doesn't end here. The real question isn't why gold endures, it's how you'll wield that wisdom next. 68% of investors miss the silent threats eroding their wealth. You won't be one of them. Next, we dissect shadow inflation, the unseen force draining your assets while you sleep. The numbers don't lie. And neither do I.